Is the S&P 500 on the verge of a regime change? This is Connor from 0DTE Traders. In this video, for the week ahead, we'll focus on upcoming events, the current market regime, transitions, the 0DTE Iron Condor guy, and end with a quick performance check. Let's dive in. This is being recorded pre-market on Monday, March 3rd, 2025. SPX is set to open with a gap to the upside, about 0.3%. So we are seeing some continuation from Friday's V reversal and end-of-day squeeze into month-end. Qs are outperforming, up 0.7%, IWM up 0.6%, and Dow up 0.3. So green across the board. The dollar index is moving lower, down 0.7%. Treasury rates higher, so a bit of a mismatch on that front. VIX, a measure of market volatility, continues to hold its bid here. Going into the ISM manufacturing PMI due out at 10 o'clock, potential market mover. Also on the calendar this week, ISM services PMI on Wednesday, non-farm payrolls on Friday, with Fed Chair Powell also set to speak at the end of the week. On the earnings calendar, major names include CrowdStrike, Broadcom, Target, Costco, and Kroger. Jam-packed calendar this week. Market regime for the S&P 500 remains negative. So the Gamma Index, which measures dealer Gamma, is negative 350 million notional, but we've seen significant improvement day over day. So we're headed in the right direction to a more stabilizing market. The transitions, which are the transitions from a positive regime to a negative regime, include SPY 595, which is SPX 5963 equivalent, followed by the SPX flip transition of 6,000. As you can see, all strikes above positive, that is supportive for the market price. All strikes or most strikes below negative, that is destabilizing for the market price. Another transition to pay attention to is 5,900. Now, strikes above are really negative up into that transition zone. But if we do break below 5,900, that's where the Gamma Index is going to go back strongly negative and essentially risk off. So we'd say as long as we hold above 5,900 here this week, we may not necessarily be in a risk on type environment, but we're not in a risk off. So essentially return to neutral early this week. Well, at least at this time, and recall we're recording this before the market opens on Monday. Now, the Gamma Index and the flip determines who's in control of the market. We've been in a negative Gamma regime below the flip, which indicates a market dominated by puts, bears in control, dealers having a short Gamma position and hedging via selling weakness and buying strength. And essentially, the lower that negative Gamma, the more instability, higher volatility there is in the market. And the opposite holds true in regards to positive Gamma. Levels today, well, the 0DTE Iron Condor guy is back. His position includes 59.95, 6,000 on the call side, 5,900, 58.95 on the put side. Now, if you've been trading the SPX over the past year or 2 years, you're probably familiar with this guy. He puts on these Iron Condors occasionally, sometimes long, sometimes short. But the point is here, it greatly influences the intraday price action, often acting as magnets and support and resistance levels. Additionally, if this participant loses, which they have lost many times this year, he implements the martingale strategy, rolling and double down, which essentially creates the same dynamics the following day. So if we do close outside a spread here today, we very well could see that roll. So double check the open interest tomorrow, and essentially same dynamics would apply. In terms of volatility, the VIX remains elevated at 19.6. Levels to focus on, I'm not going to call them out here, but you can take a screenshot, perhaps mark these on your chart. Essentially, when you're in negative Gamma, volatility is an exacerbating factor. So last week, we've been really focusing on the VIX, looking for those peaks and troughs at the big levels and, being a major trigger for these feedback loops, upside squeeze, rapid decline. Again, you can kind of screenshot this. It's a loop, which we tend to see in negative Gamma, and oftentimes on a reclaim of those flip levels. So a reclaim of 6,000, a reclaim of 59, 65, 63. We could see a squeeze-like action on the upside. Now, in terms of realized volatility, 5-day RV is nearing the upper bound. 5-day average true range is 90 points, placing it in the 90th percentile. So if we reclaim those flips, positive gamma starts to build, we should see realized volatility perhaps start to tick lower here this week. In terms of implied volatility, options are pricing in a 2.5% move this week. Pretty low volatility today, relatively speaking, 0.7% implied move, with an uptick on Friday at 1.1%. That's for non-farm payrolls. Just to give you a different visual, we are looking at the SPX on the 15-minute chart, clear downtrend over the past 2 weeks. We have a downsloping structure connecting the all-time high up here around 6150, 1 test, 2 test, 3 test, 4 test, break on the 5th test. Late day Friday, that is a bullish indication. We have a secondary downsloping structure connecting last Monday's high, 1, 2, 3. Now, this is less significant, nonetheless, could be respected as resistance. In terms of horizontal levels, SPY flip 5963. That is our first transition, which opens the door to 6,000. Our secondary transition, a break above 6025, 6030. This is not quite Monday's high. What is last Monday's high? About 6045. So a break of that zone opens the door to that 4550 type zone. And then a break would imply an outside week, with major resistance up at 6,100. As far as the downside goes, 5,900 is the major support level to watch. A break, we would anticipate more volatility as that gamma index goes strongly negative. With critical support at 5850, 5840, this is last week's low, so a break below implies weekly continuation, with our put wall and lower bound currently sitting at 5,800. I think keep an eye on that. If we do see put demand, particularly out of the money put demand, we could see that put wall shift lower, which would be an indication of lower prices. Now, negative gamma is generally a more difficult environment to trade. I just want to highlight what we implemented last week to help us navigate this market. And overall, this has played out very well for us. We ended last week up $5,060 with an 80% win rate, risking no more than $500 per trade. And generally what we did is eliminate exposure to out-of-the-money credit spreads due to their very poor risk-reward ratio, and started favoring low-risk, high-reward structures such as the out-of-the-money butterfly, debit verticals, single options. And since timing these turning points can be a little bit challenging, we've essentially just implemented smaller, more frequent trades to diversify the risk. And when doing that with low risk structures, it essentially eliminates the stop loss, right? Because debit structures essentially have the stop built into the structure. So if sized appropriately, you can kind of let the trade work. And I've had trades last week that were basically worthless. And then, in the last 30 minutes, they're trading, 240% ROI. That was on Friday. So that has worked out very well. Just kind of put the trade on, let it work. More so manage the winners than manage the losers. Now, in terms of timing, some things to focus on here are the large liquidity levels, double zeros, 50s, utilizing them for targets, pivots, and pins. Additionally, focusing on the 15-minute time frame can prevent you from, getting out too early or getting in too soon. And then utilizing structures, upsloping, downsloping trend lines to help determine the shifts in trends. I would say 3 things that helped us a lot last week. Now, everything that we're kind of highlighting here in regards to risk is the basic principle of volatility adjusting. More volatile assets, smaller position size, less volatile assets, larger position size. Higher volatility, you reduce position size. Lower volatility, increase position size. So this is really the underlying principle to our adaptation last week. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.